I'd say it wasn't their finest hour, communications-wise, and I'm sure Governor Bailey will be looking very carefully at what he said and trying not to make the same mistake again, because what central banks don't want to do is induce volatility into the markets. Having said that, I think the bigger issue is why are they quite so sanguine about inflation going forward, and that's the thing that's concerning me the most.
Yeah, now that's on that point, because if they didn't raise rates, regardless of whether they suggested they would or not, or should they have raised rates, in your view, even as a symbolic symbol, let's face it, a quarter point is neither here nor there, one way or t'other, would you have preferred a quarter point on rates?
I mean, they'll say the timing doesn't matter too much, and it's pretty clear they will raise in December. But I think actually you're onto a point there. I think it was really symbolically important they did something now. Why do I say that? Well, because I think the risks to inflation are skewed to the upside. And so certainly if I'd been on the MPC and I'd noticed that we'd raised our inflation forecast for the end of 2022 by a whole percentage point, I'd certainly be thinking about raising rates in those circumstances.
You see, the problem is that central banks have missed their targets for so many years that the target has become almost a laughing symbol. So when you say that they've raised their target by 1% next year, I guess, it doesn't take as much, it's not as significant. But of course, at 5%, it starts to get significant.
Yeah, I mean, there's an element of truth to that. What they've done is raise their forecast, not their target. The target remains 2%. The forecast is, they're at 3.5% for the end of 2022. And as you say, they're at 5% for April.
Right.
Now, do you know what? Inflation may well fall, and it may well fall relatively precipitously next year. But I certainly think the risks are clearly skewed to the upside. Why?
Right.
One, because demand could be very strong. Two, because supply could be weak. And both those things, for that not to have come through in today's decision, I think is really quite surprising.
Now, I want you to have a listen, if you'd be kind, as to what Larry Summers, former US Treasury Secretary, told us about the state of the US economy. After that, we'll talk.
Inflation is a serious problem. I think if we can resolve the Stimulus Recovery Act, Build Back Better debate quickly and pass legislation that's oriented to increasing supply, that's paid for in what it does, I think those are going to be the best ways forward. I think the Fed is still not fully recognizing the gravity of the situation.
So the last bit there, Shamik, he thinks the Fed isn't getting the gravity of the situation. I'm hearing you, maybe not so bluntly, sort of suggesting the same with the Bank of England. Do you think the Fed's decision yesterday on tapering, too little too late?
Well, look, at least the Fed didn't miscommunicate in the way the bank did, so give them a little tick for that. I think I have sympathy with what Larry Summers says, though. I think, again, the way I'd express this is that, even if you think it's more likely than not that inflation will fall next year and fall back towards target, where do you think the risks lie? And it seems to me that for the first time in 25 years, that the risks really clearly lie to the upside. And therefore, even a small precautionary move would make sense. Look, I think the Fed will be moving in that direction, maybe, early next year into Q2, a bit earlier than the markets currently expect.